Today, we're going to discuss gold's current prospects and the supply and demand issues, which in the long term could be the main driver for the commodity. Simon Popple, the editor of the Gold Speculator, is here with me now to discuss these topics. Hello to you. Thank you for coming in. So as I say, it's all about supply and demand. What do you think is the main issue?
Now, we live in interesting times, and with less production seemingly coming on stream, it's going to be quite interesting to see how the market reacts.
So it's the supply that's the major issue here, isn't it? That's
right. I mean, if you look at the amount of new supply that's come on in the last few years, which is at the top of this graph, 2014, 15, 16, you'll see, compared to previous years, it's fairly negligible. And it's difficult to see how this is going to really change that much. I mean, obviously the old mines are depleting their reserves, and so there'll come a point when production starts to decline, between a discovery and production growing. And on the left-hand axis, you can see, it's quite a considerable amount of time to get some of this new, all these new discoveries into production. And I think if you actually sort of marry that with the fact that fewer and fewer major discoveries are being found, that it's becoming more and more difficult for gold companies to find gold, and obviously it's very expensive to do the exploration. And here you can see, the major discoveries really falling off a cliff since 2006. Very, very few new ones are now being found. Also, you see the exploration spending is similarly, that's going down because it's just very, very expensive to find these new deposits. And so what we're kind of looking at is really two things. First of all, if an existing junior mining company has a good resource, there's a decent chance that a major will come in and buy it, a bit like Exeter being acquired by Goldcorp recently. And secondly, if you've got a junior which has got very, very good prospects of finding gold, then they're very interesting players as well, because if they do find what they're looking for, and it is a major discovery, then there's a very good chance that one of the major companies will come in and pay a very good price for it. So it's a very interesting time at the moment. You've got the majors perhaps looking for junior companies as their sort of pipeline for new discoveries, and you've got the juniors who are either sitting on a large discovery, perhaps waiting to be acquired by a major rather than take it into production themselves, or you've got some that are sitting on very sort of huge potential in terms of discoveries, and if they find what they're hoping for, then a major could come in and snap them up at a decent premium. And
if they do that, what will happen to the price of gold?
Well, this is almost independent of the price of gold in a way, because we're talking at almost the micro section of the market. I mean, gold is not consumed like silver, so each year when more gold is found, that goes on to sort of the gold stockpile. But as I said earlier, a large chunk of this is moving from west to east. So if that takes it out of circulation in terms of trading and availability, then the logic is that the gold price will go up, potentially quite dramatically, because if you look at what happened in the 70s, 80s boom, we're nowhere near that at the moment, and with the price at the moment around sort of 1250, we're a long way short of the previous high of sort of 1900. So there's huge potential for the gold price, and if this sort of supply-demand issue plays out fully, it could go even higher.
Okay, we'll leave it there. Thank you very much indeed. That's Simon Popple there talking to us about the supply factor in gold.